What's that? What's that? 3 and 6, 7? 3 wins, 5 losses, man. Oh. How's everybody doing today? Where are you? You out there? Welcome to the closing beat. I'm now 3 and 7, 3 and 5. I'm 3 and 5 now, baby. You know, rock paper scissors is not my game. That's what I do. I lose at rock paper scissors, but I don't lose at the sports betting. Actually, I got something fun for you, real quick, Cody. Let's see, where do we go? Taiwan says, man, first of all, I'm fascinated that you're interested in handicap football, Dustin. Yes, thank you. Football, field goals, but, you know, especially at my age. I don't know if that's a dig. We've had enough digs today, so I'll probably just let that one slide. Gonna try not to make this message long, but always play the money line, man. That's what he wants me to do. You agree? You don't make money playing the money line. NFL games are decided by 6 points or less most of the time. Advice to you this week: pick the Bengals over the Cowboys. Well, there you go. Oh, Cody agrees. Yeah, he said to pass it on to you. See what you thought. You agree?
The juice isn't worth the squeeze in my mind.
The juice isn't worth the squeeze? Oh, we've gone way off topic here. I have no idea what that means. I don't know what that means. The odds aren't worth it. Okay. Whoa. Well, speaking of odds, we're going to talk about the market and the market's odds today. Look at me go. Because the odds were supposed to show you something else, did they not? I'm still playing here. They did not. Ooh, look at me getting centered. Oh, man. Oh, real quick, before we start tomorrow, Wine and Wealth, we're going to focus on retirement topics. And good news for you guys, if you're in retirement or taking Social Security or looking to take a Social Security, the COLA increase looks like it's going to be 8.7% versus about 9.1, I think was what was expected there. So, I don't know. It's better than nothing there, but we'll talk about more of that in our Wine and Wealth tomorrow with the retirement there. And let's get started over here with the stock market. I'm going to hit the charts button. Everything is working just fine. Here's the S&P. Where did we stop? Right at the uptrend. You see that? So I hate to be the I told you so guy. I always like to tell you ahead of time. So we drew these lines here for you just to kind of show the range there. I'm not interested in proving something right. I'm interested in the data. I'm interested in people's emotions and how they respond to the stock market. So where we stopped now solidifies that is support. Whether you believe it or not, everyone that has any significant participation at this point in the stock market has decided that this uptrend has some belief. It has something that we can use, at least in the short term. It's really one of the only technical areas that we have to use. So any break below this, you would expect to see continued weakness, which would likely challenge really probably the ultimate lows, I mean, if you had to guess. And so any day where we move off of this, as long as we don't move above the big downtrend, then we're stuck in this range. All right? And the market has never moved that much in one day anyway, so we don't have to worry about that happening in one day. So we have, I'll just leave the lines so we can always see them here. This is the market that we're in right now. It's a technically driven market focused on focused on the fundamentals of inflation. There we go. I was just trying to make it pretty for you. And so until we break above or below this area, we all know we're looking at the same thing. Who's going to be the first to take a shot? Who's going to be the first to bail if we fall down there? So just wanted to point that out to you because the market is in a unique spot where it is showing its face at every corner there, right? That's what it is. So it's sometimes not easy to decipher. Currently, it is pretty easy to decipher. I promised you I would have some information for you here today, visually, a lot of which I shared yesterday, so I'm going to continue with that here. Yesterday, we lost more than 4% in the S&P. I believe it was the worst day of the year, but just by a little bit because we had some nastiness there back a couple months ago. And so I mentioned that the S&P actually likes big single down days. All right, let's take a look. So the average next day performance for the S&P after losing 4% or more in a day is 1.13%. We didn't quite get there today, actually. By the way, the average any one day over the lifespan of the entire market, the average one-day performance is 0.03%, in case you didn't know. Put that in blue. The average next week performance is a slight recovery from the big one down day, and any 1 week in the S&P The average performance is 0.17. I find that more interesting than this data personally, but after the market loses more than 4% in one day, the next month going forward from there, performance averages 2.04%. Any 1 month in the market averages 0.7%. In other words, what I'm not trying to show you that there's guaranteed returns here. I'm trying to show you that it beats the average performance of the market. What did we do today? We didn't gain 1.13%, right? You could see it on this slide right here. The S&P gains basically 1/3%. Well, we didn't beat the average, but what's interesting is we beat the average of the normal one-day market move. That's a small thumbs up. I mean, I'm trying to paint the rosy lipstick on a pig here. You can see I'm trying as hard as I can. It's not great, but it's better than average. And so we'll roll with that for now. Over the next 3 months and 6 months, the market tends to outperform itself after having that big, solid, singular down day. And so think about what happens here. Who just said it? Who just said it? Harry just said it, right? So what do you think happens here? Is this a lock? Is this guaranteed? No, God, no. This goes into the midterms, right? So volatility is going to be there, but historically the market does outperform itself. So anyways, I told you I'd share that with you here today, and I'm just delivering on that promise for you. You know what I'm saying? All right, going over to the charts here. You see the S&P. If I could real quick, I think I have this set up in a way I can see. The trouble within the S&P today is that none of it was consistent. At the end of the day, somebody mentioned market manipulation in just a minute ago. That's kind of true. At the end of the day, the money went to the larger weighted stocks. It didn't go anywhere else. Did you see Union Pacific bouncing at the end of the day? A little bit, actually, but that's not going to move the market. Did you see Honeywell bouncing at the end of the day? Kinda, but not anything more interesting than did you see Apple? It took a shot. What was Amazon was up 1%, I think, by the end of the day. Actually, reverse course, turns positive, everything through the day. Did you see Tesla today? I'm actually impressed by that. That was a good move on Tesla's part, but it closed at highs. The stocks that make the market move the most got all the attention at the end of the day. I'm not saying that's manipulation. That's just smart people putting their money where they think they're going to get the biggest bang for their buck towards the end of the day. You got Citigroup down, but you got Wells Fargo up. You got PNC Bank up, and you got USB down, right? Like that's what I'm trying to say here is you had Google higher, Meta lower. You got T-Mobile higher, Verizon lower. One place where you didn't see, one stock was lower is in the energy space, Valero. Oh, sorry. Valero was the only stock in the energy sector that is worth anything weight-wise to finish the day lower. All the excitement was over here in the energy space. That's your leading sector today. It has been. It's the best performing sector year to date, so we're not, telling you anything new here. But energy was the focus. Why? Oil. There you go. Oil doing well here. Now, I'm going to do something a little odd. I'm going to give credit where credit's due. Let's see if everybody in the office agrees with this here. I'm going to give a little credit where credit's due. You have the Biden White House. Some would say Biden, but it's not him doing it. But they're selling off the Strategic Petroleum Reserves, SPR for short. They sold and have been selling at an average of $120 a barrel. Remember, they're not giving it away. They're selling it, and they get I went over this in the class before, how that actually works, but they're averaging essentially credits or dollars in the amount of $120 a barrel. Now, they want to buy back and replenish the Strategic Petroleum Reserve. Well, forward futures are actually trading at under $80 a barrel. So for the geeks out there, they're using 2023 futures contracts to buy back what will be eventual take control of custody of oil that they will put back in the Strategic Petroleum Reserve. Have I lost you yet? Have I lost you? Anyways, what I was saying was, hey, all right, I'll give you credit for that. I don't agree with you diminishing it, but I like that we're putting it back at a cheaper price. We all apparently will make a little bit of a profit off of that. The trouble that I have with this is that the Strategic Petroleum Reserve now becomes a bit of a buffer to physical movement in the price of oil. I don't like that we now know that we can play with that toy over there and maybe make a profit at the same time while protecting against large price swings. I don't like that. But nonetheless, well done. So give you credit there. You see what I mean? A lot of times you can just be nice. Oh, you couldn't see the charts there. Hey, let's look at notes here real quick. I'm actually going to show, and I am showing the notes. Okay, so we're looking at the 10-year. The sell the market on anything over 3% in the 10-year, still holding true there. We have the Fed funds decision coming up next week. They're currently sitting at 2.5 by 2.75% there. They are shooting for 4%. Right? We're not there yet. Don't be surprised if by year end you see a 4.25 by 4.5% Fed funds range, I guess you should say there. There's now a 68% chance that they will raise next week by 0.75 of a point, and 32% chance that they're going to raise over 1%. You know, that's interesting, but what were the stats? Is that a trending number, or is that number going down? You look back a month, you find there was a 50-50 shot of either a half-point rate hike or a 3/4 point rate hike. So I thought that's pretty interesting. Looks like we're locking in at least 0.75 of a point. One last thing that's not always exciting. I don't often talk about it, but I'm going to use the UUP today in case you guys want to play along. You have, this is the dollar. It's an ETF that is directionally playing the dollar. In other words, it's a bull ETF. It's not leveraged or anything, but that's what it is. It's about to hit new highs. Now, we stopped talking about it for a little bit because it was pulling back. We've all of a sudden rallied back, made new highs, short pullback, and we're about to make new highs here again. Remember that if you are watching the dollar, or if you just don't care at all and you just want to peek at it, remember that as the dollar gets stronger, companies with a greater percentage of foreign sales, will, as a percentage of their total sales, become worth less money. For example, Newmont, see the pressure? This stock will not have a relief in pressure until the dollar starts to get a little bit weaker. I actually put together a little list. Didn't quite have a moment to make anything visual for you, but you're going to find a lot of tech stocks are going to struggle moving higher because, what is it? Cirrus Logic gets 98.7% of their current revenue comes from overseas, right? QCOM, I try to pick some names that you guys might be familiar with. Notice the weakness there. This has nothing to do at the moment in a significant way to the price of QCOM or what they happen to be working on, or the fact that semiconductors are a little weak. They get 95% of their income from overseas. The dollar is strong. They're losing to that Forex headwind, if you want to sound smart. You got the same there for Lam Research. You got the same for Applied Materials. We'll go back to gold for a second. Royal Gold. Oh, I typed it wrong there. RG. There we go. Royal Gold gets a total of 90.2% of their revenues overseas. Texas Instruments, again, you kind of see how we're sticking in the same area there, 89%. If I jump outside of that real quick, go to Booking Holdings. Booking Holdings, you know them, 88.5%. And so these names are highly, highly subject to the trend or the movement of the dollar. Not so much day to day. You're not going to find a lot of correlation there, but I thought I'd just point that out one more time because they're making that move. All right. Real quick, not too many stocks in the news, higher lows or highs to talk about. But you got Albemarle. Made new highs today. That has been on a tear, right? Been on a tear. Nucor with the news today. That was the worst performer in the S&P, actually, selling off. But I do want to point out Corteva. Also, very similar patterns in this industry. If you like this sort of stuff, look in that industry. I can't tell you to go buy it. I'm not allowed to make those comments. But I tried to point out yesterday the utility stocks that all look the same. I don't know what's going to be a winner, but I can tell you all those are looking really strong, and maybe you have some bias one way or the other. Anyways, moving on. Stocks in the news, I believe. Jess. Yeah, okay. We did it. All right, stocks in the news. There's not much, man. People are looking for anything to play along with here in the news, which drives volatility. Starbucks gets a little bit of excitement because Howard Schultz, their CEO, obviously picks a new guy to come in and take over there, and they have a reinvention target, reinvention goal, something, right? Everybody loved it. I didn't catch the details of it yet. I'm very interested in reading about it, but had not got there yet. Nucor, this was the worst performer in the S&P, as I mentioned a minute ago. Their earnings guidance was much weaker than expected, and they said it's going to likely be considerably lower by the time they report earnings. They went for it. They gave you the heads up. Johnson & Johnson, they're buying back stock, right? Is this them? They're buying back $5 billion in stock. So that'll lift a stock higher. Remember we talked about Uber yesterday? Okay, you got Schwab in here as well. Now, this one's a little different. No, this is not the one. Schwab is going to be releasing their sales numbers tomorrow. And it can be a stock mover. It's definitely not a market mover, but it can be a stock mover. And I put the same name twice. What I was trying to put on there, it's not great, but I got a rare stats play here for you. I meant to put Humana. That's my fault. There you go. What's going on here? One of the healthcare stocks selling off quick and aggressive. Okay, let's take a look at that. So Humana is, I don't have it showing so well on this chart here where you can see it, but Humana is now over 2.5 standard deviations away from what would be the blue line. I don't have it on the charts there. So it's extended. That's all I really need to know. If you're making a filter, some sort of screener, right, and you want to look this up, you'd have to define how extended you want it, and that's how most people do it. They just define the number of standard deviations away. Well, anyways, we're over 2.5 standard deviations away here. When you find other moments in time where Humana, such as this over here, that would have been well beyond it, but anyways, that would count on a scan. You find any other time that you're more than 2.5 standard deviations away from the 50-day, you would find that over 50% of the time, 53.3% of the time, in the next 1 week, the stock attempts to rally by an average of 3.09%. Now, I can't tell you what to do. Some of you that go way back with me, you know I like the stats plays there. That's just the historical stats of Humana. I can't say that it will do that. I don't know if it will, but it is very extended, and for whatever reason, Humana likes to attempt to bounce. I would add to that, you have an otherwise strong sector with broad-based sector buying, and here's a stock that just got extended to the downside. Is it a bad stock? I don't know. Can't tell you. I can give you the stats, though. I hate doing that to you guys, but that's how the game works here. I'm not allowed to give specific information. Anyways, I will take your questions if you happen to have any. I believe that's everything that I covered, or was meaning to cover. Let me go back over here, just make sure, because tomorrow the Communicopia conference ends. I did not get to look at anything from yesterday's results. I like reading through the details of every company there. There's a lot of them. Didn't get a chance to read through that. And that's really it. Adobe will have earnings after the close, but it's kind of quiet out there right now. And hopefully you are SOH is what they say. Yeah. Giovanni, you like your Google for the long term? I don't like it as much, I guess. I'm not trying to bring you down, but if we go to the charts here, are you just playing, well, you said the long term, so I don't like it for the long term. This could be a long-term huge risk to reward if you want to play it that way, but you'd be basically saying my risk is from here to, say, $100, right? So you're risking $5 to, over the long term, make 50, something like that, but you got to keep that risk small. I've done classes about that where we talk about your risk size relative to your reward and how do you fix a price stop in there if you're going to do that. But I'm not a big fan of these types of plays where you say, if it holds, I will hold. If it breaks, I will sell. I don't really like that myself. Is there a way to chart the success or failure of fighting the Fed in the stock market? It seems pretty the market's stubbornly resisting the Fed's open policy to smash inflation. Is there a way to chart that? No, because I think what you're saying is chart or the Fed in terms of their rate range. Is that what you're saying? So is there a way to compare that? That you could, but when you say fight the Fed, we've got QE, we've got interest rates, we've got them just coming out in full force and being aggressive. They've got a handful of tools, but I think if you're saying, I just want to track their rates relative to the market, I would include inflation in there as well, but I don't have anything good for you off the top of my head. Increase the rate one. Yeah, he's going to town. I think they're going to overdo it. I don't have any control in that. I obviously don't have enough knowledge to be that guy, but I think they're going to overdo it myself. We will see. Yep. Travel stocks strong today. Well, you have your little slim pickings there of areas. So when you look at, where was Royal Caribbean? Right there, right? Can you see it? There you go. So you're pointing out things like this. I've got Norwegian Cruise in here at 4% somewhere. There you go. And then as far as the S&P goes, Carnival is going to pop up. They didn't do as well. Yeah, I don't know. I don't see much else. Are you talking about like Delta with 2% there? Yeah, it outperformed a little bit in American. I don't know. Oddly enough, didn't look at travel stocks today. Yeah, buddy. Doc, no, I mean just their whole process here. Like 1%, if they raise 1%, that's fine. 0.75 to 1% is what it is. I just worry that they're going to keep talking tough, and if inflation doesn't immediately just reverse and start heading lower, what if they raise rates past a point where it's really sustainable, everything dries up, and then inflation comes crashing down, but so does the economy and the stock market? I wish they would raise the rates, maybe go another 1%, then just hold tight. Just hold tight. Let's see what happens. You could talk aggressive, but, don't be so aggressive. All right. Well, we'll see what happens, right? Because we're definitely going to be here. That's something that is going to happen there. But in the meantime, I'll wish you guys a good rest of your day. And we'll be back tomorrow to do this all over again. Thanks for the support, and adios. Hope everything worked well for you.